Welcome back to the Wyckoff Crypto discussion. This is a special episode. Our weekly market outlook will be back in January. Today's session is totally devoted to your questions. As usual, this information is for educational purpose and is not an investment recommendation. Please stop the video and read the disclaimer. So first question from Crypto Runner. What's the common mistake for crypto traders? Well, I personally believe that most of the mistakes come from a wrong selection. Beginners generally do not dedicate enough time to the selection process. They pick an underperforming asset, they look for a point of entry, generally spring, and then they start trading right away. I've done this mistake too in the past. And managing a position in an asset that has poor comparative strength is more difficult, and you will be whipsawed most of the times. So my recommendation is do not be lazy. A good selection should always be your starting point. When the selection is good, it's much easier to manage the position. And I think that this chart is a great example. Look at that big change of behavior highlighting in red on the chart. It's warning you that Bitcoin will be likely in a consolidation for several days. This is the time when you want to look for other candidates, especially if you're a swing trader. So you can still extract profits from this trading range if you are an intraday trader. But look at the bottom chart. What do you see there? Initial leadership, consolidation, Chainlink shows a lot of strength during correction, backing up action. So the second chart is much more interesting. And managing this swing trade from $10 to $18 in just 10 days is less stressful. And the chart provides you with textbook point of entry because you are riding the winning horse. So especially when you're at the beginning of your trading career, focus on selection. And Roman devotes many sessions of his trading course to comparative analysis and relative strength. So check out the new Wyckoff trading course that will start in January. As always, you can attend the first session for free. So Roman, your remarks on this case study?
Yeah, I definitely like the whole idea about going about the selection. You have to spend time developing the skill. How do we select correctly? So I absolutely agree with Alessio. I'm not going to go through the analysis here because Alessio has done a fantastic job. Just also want to say that Alessio, in many conversations that we had, you actually mentioned another mistake. So maybe it's something else that we could talk about, and that is the mistake of trading a specific time frame. So, for instance, what you observe in a lot of the crypto traders is that they try to get some quick profits that are just a small part of a much larger move. It's also very common with stock market students, traders as well, just to go to the lower time frame. I think it's very human of us to try to get as much as possible in the shortest period of time. But it's actually those who wait and ride the trend, they get the most benefits. So Alessia, I was wondering, what are your thoughts on that?
Yes, generally I love the 4-hour time frame because in crypto it provides you with the biggest traction. At the same time, you can look for point of entry directly on this time frame. So generally I use daily charts and the 4-hour charts. These are my best time frame in general. And I think that very interesting on cryptos.
Yeah, and definitely check out our educational offerings. The Wyckoff Trading course, as Alessia has mentioned, is going to start with the news cycle on January 4th. January 4th is the complimentary session, so please go check out that session. If you have any questions, email us. We will be happy to answer those, and just be a part of our community. All right, let's go to the second question, Alessia.
Yes, what tool can help us to identify the emergence of the leadership? From Juan. So simple tools always work the best. So in the stock market, we generally use a relative strength ratio chart. It's derived by dividing the base security by the index, which is to be used for the comparison. In the crypto market, I really love spread charts. Spread charts were extremely popular in the crypto ecosystem because in many instances, Bitcoin was used as a money of account on smaller exchanges where the USD liquidity was really poor. Spread charts are still relevant today, and you can use them to time the emergence of the resumption of the leadership. This is an historical case study that we have discussed in the crypto report many months ago, but it's still interesting. So at the bottom of the chart, we see the Ethereum Bitcoin ratio. Look how the initial leadership deteriorates during the long reaccumulation range starting in March 2016. So leadership assets usually underperform the market during long consolidations. Look also at the vertical chart. The change of character exhibits bullish characteristics. The reaction is still shallow compared to the big run to $20 and shows decreasing volume signature. After heavy selling off the top of the range, supply deteriorates and locally increases in phases C. So this is the textbook's accumulation. And look at the Ethereum Bitcoin ratio. The break of the sloping range, marked in red, indicates the rotation of institutional capital from Bitcoin to Ethereum. So this is a powerful signal announcing the resumption of this long-term leadership. So simple tool, but great signal. Your Max Roman.
Yeah, I really like this whole idea. Actually, everything that Alessio does in the crypto world uh, originated, as I believe, Alessio, with our studies in the stock market, and how wonderful to see, that usefulness of the same tools, but you definitely have to calibrate them correctly. And Alessio is showing you exactly how it should be done. So we are basically looking at the relative performance of Ethereum over Bitcoin, and we are trying to time the emergence of the trend in relative strength where it occurs in the price as well. So, and I think this is a very great, structural point to enter, just because we are showing with all of the signs throughout the trading range, as Alessio described, all of the bullish signs, and then we are in the sign of strength in the backing up action, and the leadership is starting to improve and shows an ability, to outperform Bitcoin. So what's not to like here? Again, two questions, Alessio, and on selection, and then on timing as well. Just beautifully done. So thank you for showing us this.
Great. So now a question about PNF charts on small caps from Luis. Is it possible to apply PNF charts on small cap cryptos? Yes, of course it's possible. I do that all the time, and believe me, sometimes I find it easier to work on point of figure charts on these small caps than Bitcoin itself. So here is an example that I've discussed with Troy in a webinar a couple of months ago. So there are some nuances that we have discussed in the crypto course in July, which is still available on our website, but the principles are always the same. A major base and then stepping stones count that confirm the original base. What I really like about PNF charts on small caps is the fact that they help you to manage these big parabolic up moves, and you can really understand in this way the structure of the market. Sometimes it's not easy to find the right scaling for these cheap coins, so you have to practice a lot. But we're so lucky to have with us one of the foremost point of figure experts in the world, Professor Bruce Fraser. So Roman, your remarks on this chart.
Yeah, there are quite a few things that we could notice here that we could use as helpful techniques. Alessio is showing you the horizontal counts. Yes, please go, for those of you who are interested, on our YouTube channel. We have free videos from Bruce Fraser, who I consider probably to be the best authority on the horizontal counts in the world. And we also could use PNF charts for other conceptualizations of some ideas that we see on the chart. For instance, we're seeing how the volume suggests institutional participation early on in the accumulation, and then look at the volume signature that stays very, very low during the uptrend. This is very common because the supply has been consumed, and it's not being presented to the market until this bar. I wonder what this bar shows on the price. Well, that looks like a climactic run. And with that, with the indication of the volume signature and the climactic column of axis, we're probably thinking that this is a stopping action in the vicinity of our targets. And therefore, we could expect some kind of reversal, stopping action, potential trading range, and a change of behavior. And all of that kind of comes this way. And you could observe the columns of O's in comparison to what we've seen before, let's say on the way up. That also should give you a very clear indication that the behavior has changed. So there is a ton of things here to study on the chart, on the PNF charts. And again, please do follow Alessio because he has developed also a very, very great eye for the PNF horizontal counts.
So here's a question from Yuri. What do you think about leverage tokens? So leverage tokens are very similar to the leverage ETF in the stock market. And you can see an example of leverage ETF in the stock market on the bottom chart. Leverage ETFs generally provide investors with the ability to achieve 3 times the daily performance of the index. But leverage ETF on crypto tokens are designed to achieve their multiplier or one-day returns, and you really can't use these tokens for a long-term position. They are trading instruments, and they can't be used as a part of a buy and hold portfolio. So as you can see, the two charts on the top are very, very different. The chart on the top is a leverage token on Bitcoin. When you use a leverage token, you should watch the original chart of the asset, for example, in this case, the spot market or the perpetual future contract, and then use these tokens as a trading instrument. If you don't know how this instrument works, you have to study how these indexes are constructed. So let's quickly go to the next question. So which broker do you use to trade this cryptocurrency? From Luke. Well, there are so many exchanges today. Kraken, Coinbase, and Binance are the most popular exchanges. Generally, on the biggest exchanges, you cannot find many ACOs, microcaps, and so on. So there are smaller exchanges that are focused mainly on new assets with low liquidity. When a crypto project attracts more attention and liquidity, new assets are generally listed on bigger exchanges too. So if you are new to the crypto world, just start with one exchange. Advanced traders generally have more accounts on several crypto exchanges because they want to trade all the crypto assets. However, for these advanced traders, I would recommend to use a trading interface like Coinigy, Quantover, and so on, because these platforms are very similar to Thinkorswim, and you can monitor all your position trade just using one platform. And that is really beautiful because it will save you a lot of time. Go next question, Roman. So from Georgi, do you trade ICOs and new listing? Well, you can trade new listing, ICO, and so on. There is generally a lot of volatility in this asset, so you have to be very, very fast. But especially when there is a lot of excitement in the market, you can see huge bull run in just few days. After that bull run, we'll generally have a more pronounced IPO disease, like Bruce is calling this chart pattern. So here you see an extreme example, Sushi. Since crypto is not regulated, in many instances, the founders of the companies hold a huge quantity of shares or coins. So serious projects have generally transparent rules, but when the speculative sentiment is strong, developers are able to launch projects in just a few days and raise a lot of capitals within the crypto ecosystem. It has happened in the past, it will happen again and again. So in this case, the creator of Sushi raised 30 millions in just a few days in late August. Please remember the sentiment of the market in late August. Extremely bullish, a lot of speculation. On September 2nd, just one day before the heavy selling in the Nasdaq, the creator of this project started dumping all his coins. However, since the blockchain network is public, anyone can easily verify how many shares are still present in the pockets of the biggest stakeholders. So at point 3, the news that the creator of the crypto project was dumping his coin on the public was public on Twitter. However, look at the volume. In the panic, someone is buying. After a few hours of despair, a major player in the crypto community step in and say, I think that this project has a lot of potential. I have a long-term project for this coin. I'm gonna step in and build something big on this cryptocurrency. I will involve new people and so on. And after that, after the very speculative, the first speculative stage, we see a trading range that start. So let's go to the next slide, Roman, because now we can see the huge accumulation base that Sushi is building. So very interesting pattern with a small accumulation range, principle within the principle in the center, in the middle of the chart, and the huge absorption that we see, especially on the last days. So this rally, while Bitcoin is running, is grinding up, this cryptocurrency is still behaving very, very well. So very constructive for the long-term price structure after a huge speculation in the first 3 days. Your remarks here, Roman.
Yeah, I like this area right here. So it has some volume signature behind it, and yet the price is making higher highs, higher lows. So what does this suggest? Yeah, there is some supply that's coming in, but it's being absorbed because demand is present and there is demand for this particular asset. And it happens in the middle of the range, of this long-term range, where before, obviously, they were selling, and now it's a different behavior. So that looks bullish. There is a little bit of the deterioration here of the momentum, but we would expect that come into the resistance, so we just have to see what kind of reaction we might potentially have, or even if we would have. All right. Okay, Alessio, well, that's it for this episode. Again, very interesting questions. I would say, keep sending those questions, and Alessio, I think that maybe once a quarter we could do the Q&A of accumulated questions, just to go through some of the things. Again, guys, I really, really would recommend, if you are a crypto trader, if you trade based on the technicals, if you trade using Wyckoff methodology, but not necessarily, you have to trade Wyckoff method, come to our community and specifically to Alessio, because Alessio has developed expertise in this field, as you could see as we go through so many slides and so many points of analysis. And those studies are very nuanced, and those nuances are the means to create wealth, trading crypto assets. And hopefully we're going to have something new for you in 2021. So looking forward to that. Once we establish, that new project, we'll definitely let you know. And with that, happy holidays, Alessio. It's such a pleasure working with you, and just to go through all of these charts. Eye-opening for me in terms of how the price moves and how that market functions. So really appreciate your inputs.
Thank you, Roman. It's always a pleasure to discuss the Wyckoff methodology with you, and we will be back with our usual market outlook next week.